Hello everyone, how are you? This is Kay. Welcome back to my another video on my YouTube channel. I hope you're having a great day today. So today I would like to introduce the Candlestick Part 2 video, which is the Trading Philosophy by Munehisa Honma. And before we get into the candlestick patterns and how he was creating these candlesticks first of all, I thought it would be important to touch on his trading philosophy and also the mindset, so that you know exactly how he came up with the candlesticks and how he also came up with these patterns to trade based on these candlesticks. Because every indicator looks at different parts about the markets and different concepts. So every time you know something about new strategies or new indicators, I always recommend everyone to first get to know the philosophy if you can, and then also know backgrounds so that you know exactly what this indicator is exactly trying to see about the markets. And today I would like to introduce some of the philosophy of his work. So I hope you enjoy the video until the end today. So let me move on to the next slide. So here we go. So Munehisa Honma, and also we call Sokyu Honma. He lived between 1724 and 1803. So all these books were actually written in the 70s. So he wrote below books. One is the Soba Zanmaiden, and this is more about the fundamentals of the markets. So he has been trading rice, and he has been the most successful trader back in those days in Osaka Dojima. But as I mentioned on the first part of the video, he actually he got the losses, and he lost all the money when he was in Edo, Tokyo, and then came back to Sakata, his hometown, and then he get funded again, and then came to Osaka, and he became very successful. So Soba Zanmaiden is more about the fundamentals in terms of weather and the time cycles, and also the temperature and the seasons about the rice market. So I say time cycles, but he wasn't using the time cycles as Goichi Hosoda was mentioning within his Ichimoku books. But he was more about the time cycles within the seasons. Like when market is going down this way, and then most likely around this time of the year, the price of the market increases, and you may be able to make profits. So he has been looking for the patterns within the market and demand and the needs of the rice market, and also the seasons, and how also sometimes these disasters within Japan can change the whole market price levels. So that's something that he was mentioning in this book, and I picked some of his words that I think we can still apply nowadays from this book. So I'm gonna introduce that within a minute. And then also he wrote another book. It says Sokyu Ohiroku, and this is another famous book of him. And in this one, this is more of the mixture of the fundamentals and also the technical candlestick analysis. And I have picked some of his words from this book also, and I will be introducing that today. And then he also wrote two books, Soba Keisen Jutsu Kogi, and also Sakata Senjutsu Shokai. And these two books are more about the candlestick patterns and how he technically traded based on the candlesticks. And what I introduce on the next video series, it's called Sakata Goho. So today, let me introduce some of his words from these first two books. And here we go. So Soba Zanmaiden. In this book talked about fundamentals like harvest time, temperature and weather, etc. of the rice market. But you will get good insight if you replace harvest time to, let's say, fundamental news in Forex or any markets. And you can replace also temperature and weather to the market environment. Like the market tends to be up and down, And if it's a trending market, then oftentimes it's related to temperature and weather too, back in those days, he says. So we can relate still some of his words to the markets whenever and whichever we trade still nowadays. So let me introduce some of his words. One is, he says, initial trend is really the key. So he is the type of person who wants to buy in a cheaper price and sell in higher price because that's a commodity trades. So he always try to capture the bottom and top of the market. So he says initial trend is really the key, and it's more like he says the power of the initial trend and how the initial trend happened is really important. He says, let's say the initial trend, the new trend starts slower, then most likely it doesn't really go up and high. But if the initial trend is fast and strong, then most likely it goes up and up towards the next target. So he says the initial trend is really the key. So if you can apply this to the market still nowadays, and I can say that, let's say if you see the, let's say, daily trend, and if you, let's say the market goes down and down and down, and the market suddenly goes up, and then sometimes the market goes up, but this retracement is very choppy. For example, like this choppy. Sometimes you may see Y wave or triangle, but it may consolidate for a couple of days. And this is not, I would say, an ideal pattern to buy because the market may go down continuously. But let's say this retracement happens on the N waves, for example, then this is likely to go up after this. So that's what he says about initial trend is really the key. So if you can buy on the N wave, then the probability for the market to go up will be higher. But if you buy on the range market, then you never know which way it goes. So that's like the something that he says about this book. And also better to wait for 3 days if you don't find a good opportunity. And this is also about the patience. I say the trend happens every week, but it doesn't mean that you can trade every day. The market's moving every day also, but it doesn't mean that you can trade every day. You have to wait for the right timings and right setup to trade. And it may be 3 days. And 3 days is like a symbolic word. So it can be 3 days, 2 days, 1 day, or 3 hours or 3 minutes. But you have to be patient is what he really mentions here. And also he says watch markets carefully and move when it's the right time. So that's about also timing and patience. And also he also says no more than 3 good chances within a year. 3 good opportunities within a year. So he says, in this case, he says it doesn't mean that the opportunities, good opportunities happened only 3 times within a year. It doesn't mean that. This means, this is also symbolic. 3 good chances, symbolic, means that the good chances won't really happen often. So that's what he was trying to say with this word. So if you are rushing to the markets and take profits, then you may have to wait for a couple of days or a couple of hours because the great chances won't come so that frequently. So that means you have to really wait for the good opportunities and good setup to trade. So that's what he means. And also he says when market is strongly trending down, then plan to buy it. So that's also another word of his. So this is almost like a contrarian trading style. When the market is strongly downtrend, then look for buying opportunities. So he says the market is down and then it may be a bottom. And based on his price action patterns and fundamental knowledges, he was able to capture the bottom and if you see the candlestick pattern, and then you are able to buy, and the market changes the whole direction. But mostly people are afraid to sell or buy. People are afraid to buy when the market is trending down, but he suggests to buy when it's the right timing to trade. If you see the reverse pattern by candlesticks, then it will be possible, and that's what he says. People may think it's downtrend, so the market may trending down, but let's say if you see some patterns, technical patterns, candlestick patterns, then that could be the best timing to buy also. And then also he says when market spikes up and down, then take profit. So let's say the market goes up, you bought it here, and the market suddenly spikes up and down, then simply take profit is what he says. So for me also, when the market is normal trending, I look for an exit timing and take profit. So don't be greedy. When the market is changing in its momentum, then it could be the best timing to take profit and leave the market and simply look for the next opportunities. So those are the words from this book, Soba Zanmai-den. And next, let me introduce some of his words on Sokyu o Hiroku. And this book talks about buying and selling strategies. The backbone is to take profits by following ups and downs of the market by using fundamentals and also Sakata Goho, the price action. So the idea of his was ups and downs within the market means the market goes up and down like this in a cycle, and he tries to capture the reverse pattern and sell, and try to capture reverse pattern and buy. So that was his technical strategy. And together with his fundamentals, he was able to capture those pips whichever the market goes within the rice market. So in this book he says, first, never rush to trade. So this is also about the patience. Whenever you see the opportunity is not there, then don't rush, don't trade. And next he says, traders without resting all lose. So he says we have to have a good rest for us to be able to keep winning the trades. And resting means not only physically, but also emotionally and psychologically. We have to be in a good shape in terms of physical and psychology. Then it's likely to win trades. And then he says never trade just because you have a spare time. So sometimes you have some time, maybe 2 hours, you have maybe your appointment cancelled, or you have some free time within the next 2 hours, and then you may come in the markets and you just jump in. But he says never trade like that. Always you have to look for your best setups to trade. Otherwise, don't trade. Okay, and also he says never exit too early. So if you exit too early, then the profits might be very small. So here also patience in terms of extend the profit as much as possible is a key to success. And also he says think about ups and downs of the market every day. So he says we have to study markets every day. Whenever the market goes up, think about the reasons why the market is going up now, today. And if it's going down, think about why the market is going down today. And the market suddenly changes the direction, then think also about why the market changed. So all of a sudden, maybe that was because the prices were near the resistance, or maybe that was because of the fundamental factors. But we have to think about the reasons and why the market goes up and down every day. So we have to study every day, and that accumulation of your experience becomes knowledge and wisdom. And he also says more fund does not mean you can win bigger. So we tend to think that if I have, like let's say $1 million in my account, then I may be able to win big profits. You may think like that. And it may be true, But if you're technical analysis and if you don't have any consistency in winning trades over time, then whether you trade with a big amount or small amount, you may lose everything. So account size does not relate to whether you can win big or not. And then finally he says, never trade based on your intuition. So we may get intuition and you may think suddenly that this is the right buy timing, or it can be emotional too. If the market breaks it, you may jump in, then the market goes down. So never trust your intuition, never trust your emotion. We have to be trading logically and rationally and objectively at any time. So these are some of the words on this book also. But at the same time, though these philosophies are also my own backbone too. Maybe some of these words are familiar with you through my YouTube channel, because I also apply some of his words and some of his philosophies in my day-to-day trades. So I hope you learn something new on these words and start to apply from today on your trades. So finally, on the next video series, I will be introducing the Sakata Goho. So this is the candlestick patterns that he introduced to the world, and these are the 5 patterns: Sanzan, Sansen, Sanku, Sanpei, and Sanpo. So I will be talking about them on the next videos. So I hope you continue to enjoy the series and continue to learn until you be a profitable trader. So, okay, that's it. Thank you very much for watching. I hope you become a non-losing trader. In Ichimoku community, I share the original knowledge of Ichimoku. In KTS Academy, I share my original strategy including risk and psychology management. In GTS, I mentor your trades and follow up one-on-one closely for the 3 months. Take a survey to find out which course suits you the best. Thank you very much for watching the video until the end. If you liked it, please press like button and please subscribe. And until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.